The big news out of the market on Sunday night, which we didn't get to talk about yesterday, was Square is buying AfterPay. Now, Square is currently on SoFi. It is the only stock that I own on the SoFi application. Why? Because I like Square. That's my personal opinion. I like Square. I think Jack Dorsey is a really good CEO, and I tend to think that Square's got pretty unique business model, product, etc. Now, Square is buying AfterPay, and the reason why they're buying it for $29 billion is because they have younger users in the consumer lending space. Now, this deal, which is supposed to close kind of Q1 of next year, has a number of unique aspects to it that if the integration goes well, and if the combination of these two businesses works out the way that Square and AfterPay believe it will create a very, very interesting business for Square to continue to expand globally and into other demographics. So Square said the buy now, pay later concept represents a chance to capitalize on a shift away from traditional credit, especially among younger consumers. Jack Dorsey's exact quote was, "We have built our business to make the financial system more fair, accessible, and inclusive. And AfterPay has built a trusted brand aligned with those principles." Obviously, Jack Dorsey, a very principled person who seems to constantly seek folks that he can partner with, whether internally, externally, or through acquisitions that have those same principles around financial fairness, accessibility, and inclusiveness. It's also why he's such a big fan of Bitcoin. Jack Dorsey then went on to also say, quote, "Together we can better connect our Cash App and seller ecosystems to deliver even more compelling products and services for merchants and consumers, putting the power back in their hands." Now, these are all really big, nice words they put together. Jack is a very articulate person. So what exactly does this mean? It means that Square is going to integrate AfterPay into both its consumer Cash App and its seller product for small businesses, according to the CFO. And Square recently launched banking operations, including checking and savings accounts for small businesses, and they offer loans. AfterPay was founded in 2015. It launched in America in 2018. And now that we're watching Square buy it for $29 billion, you would say, wow, that's a very big, impressive, valuable business. Square isn't just buying it, though, with cash. Square's doing an all-stock deal, which means that shareholders of Square, this is a bet the company type decision. The dilution here is, 20-25%, whatever the math works out to, in terms of Square's current market share in a $29 billion all-stock deal. So Square really believes that AfterPay plus Square equals winning in the future. This is the largest acquisition ever by Square. AfterPay has 16 million users. Cash App has 70 million annual users. And Square just reported a Q2 profit of $1.1 billion, which is up 91% year over year. So Cash App continues to explode in popularity. The financial performance of that specific part of Square's business continues to perform really well, almost doubling year over year. And they saw an increase in gross payment volume of 88% to over $42 billion as well. So Joe and John, when we think of AfterPay and this acquisition, one, do we agree this is a bet the company moment for Square?
Yeah, I mean they're spending almost $30 billion. Like that's an absurd amount of money. Like,
well, they're not spending it; they're technically using stock, right? Which is spending it to a degree, just different mechanics.
Acquiring a company, for $30 billion.
The other part of this, to me, is AfterPay is only offered by 100,000 retailers.
So you know what I thought was interesting when we were looking at this earlier was everyone's referring to them as an Australian company and talking about how Cash App is going to have access to these markets in Australia and all this stuff. But I read that 50% of the underlying sales on the platform are actually done in the US. So most of their retailers are in Australia, but most of their volume comes from the US.
Well, US is big dog.
Of course, but the integration with Cash App will obviously help expand that here. So if they're already growing at 150% per year, it's only going to accelerate.
Yeah, I don't know if we have the number. Maybe we can find it real quick in terms of how many retailers Square has, but it's definitely more than 100,000. And so if you basically take Afterpay's business and the product they have, you then immediately put that in the hands of 70 million Cash App users. You put it in the hands of however many, probably million plus retailers that Square has.
2 million merchants.
2 million? That was a pretty good guess on my part. 2 million merchants. Then you could effectively say 100K got you to a $29 billion valuation. If you roll it out to 2 million, maybe you don't simply get a 20x the value of the business, but could you 2, 3, 4, 5x the business? Absolutely, right?
Yeah.
You're literally just drastically increasing both the user base and the merchant side of the business. Seems kind of like a no-brainer if you're the AfterPay folks. Plus, you also got $30 billion.
Well, those 2 million are kind of spread across different industries, right? AfterPay and kind of the buy now, pay later system is really for large purchase items, things that you can kind of pay down over time with zero interest, not like for a cup of coffee.
Well, so these companies are also introducing what they're called like digital credit cards. So instead of you having to go sign up, if you're AfterPay signing up 15, 20,000 different merchants in Australia, they're basically offering one credit card, digital credit card, where you go in and you give the consumer the optionality to use their service at any platform, right? So any merchant, you can say, hey, buy with this card. It'll be, buy now, pay later. Same concept, but you do it over a credit card instead of signing up individual merchants. So that's probably how they'll expand quicker, but it's a matter of just getting businesses to accept it.
I also saw Square stock up big, big dog over here, seeing the green.
You're checking your portfolio?
On SoFi.com/Pomp.
Yeah.
I was out there checking it out.
Earlier, you were like, I believe in Square. I like Jack Dorsey, see all this stuff. You're doing it because you want to make money.
Well,
You're incentivized.
yeah, that's how it's called aligned incentives, Joe. Charlie Munger,
Stock's down
show me the
2.5% today.
Yeah, what was it up yesterday?
All right. Well,
Yeah, what was it up yesterday? 10%?
it's up 5% over the last 5 days.
Okay, but it was up 10% yesterday. The reason why that's interesting.
Oh, go ahead.
Was it up 10% yesterday?
I'm not going to get into it.
A big
Yeah.
number? Yeah. But here's why it's important is because if you do an all-stock deal and you pay $29 billion, but your stock goes up 10%, let's just say about $10 billion of value creation, you really on a net basis are only paying $19 billion difference for the business because the announcement of the deal ends up surging your stock, right? Making you more valuable. And so there's a way that you could back into some math where they're not really paying the full $29 billion.
But what if they would have paid 20% premium on the stock price of AfterPay instead of 30?
They pay, so I mean, you can start to do all the math,
Yeah.
right? I think it was a
There's
33,
a bunch of-
was it 30 or 33%?
It was 30 something, yeah.
Yeah, 30% increase in the stock price from Friday's trading price, which means that it's obviously...
People want to know if Square's your Roku.
I will not confirm nor deny, but I will say I only own one public stock outside of GBTC now. Square. That's it.
See if it gets you a 10-bagger.
We'll see. Yesterday, I was posting videos on the internet. I did a little victory lap from when I was on
I saw that.
CNBC.
I liked your
Bitcoin.
sweater in the one.
Yeah. Well, when Bitcoin's in the bear market, you got to wear the costume. You got to play their game. When Bitcoin's at $40,000, then
wear
they
the
play
black
your
t-shirt.
game.
You wear the T-shirt.
Yeah, my favorite meme that anyone posted on the internet still today is I went on CNBC a couple of months ago, maybe back in like March or April when Bitcoin was really raging like 50, 60K. And somebody went back and got a picture of me in a suit and tie. And then they put up a picture of me then. And they basically were like, when you're in debt and Bitcoin's down. And the next one is when I'll buy your fucking country. Shit was real funny. All right, so we got a chart on acquisitions here. High margin categories with higher acquisition costs are more likely to subsidize point of sale financing. Now, when you look at this, this is going back to what John was talking about in terms of the different industries. We can basically see each industry has very different margins, obviously, and also acquisition cost, obviously. And so what this shows is that the size of the bubble equals the average ticket size while seeking the financing in these applications. So the way that buy now, pay later works is exactly how it sounds. You can buy now and you pay for the product later, usually in monthly installments with some sort of financing on the actual application. If you look at the industries, though, luxury rental is really important. Fast fashion, which, by the way, I don't really know what fast fashion is, but it sounds like it's fast and it has something to do with clothes, which just kind of reminds me of like quick service restaurants, QSR, right? I don't know what fast fashion. Maybe John knows. John's very, very fashionable.
We should do a breakdown of QSR one day.
But what's fast
wild.
fashion?
Fast fashion is the mass production of cheap, poor quality, disposable clothing.
Sounds like something you'd like.
Hey, I'm a fast fashion leader, then it sounds like.
You're a public rec guy.
Yeah, public rec. That's a good one.
The industry churns out 80 billion garments a year. That's
Wow.
over 10 for every person on Earth.
Oh my God. All right, so fast fashion, I guess, is clothes that you could throw away, it sounds like.
Yeah, cheap clothes.
Cheap clothes that low quality that are supposed to be disposed of,
Yeah.
right? And then we said, okay. Just making sure I didn't get that wrong.
Well, I don't know if it's
We will do a section on
disposable,
QSR as well, John. Luxury rental auto repair, medical, cruise lines, etc. And what you can see is like fast fashion is a perfect example where the cost of customer acquisition is very, very high, but the gross margin that they make is kind of middle of the road. So fast fashion is probably not where they actually want to be operating. Instead, my guess is that they want to be doing things around entertainment and ticketing in the bottom right here because the cost of acquisition is very low. And then the gross margin that they can make is relatively high. So you can kind of work your way from entertainment and ticketing to medical all the way up to luxury retail is kind of where these folks want to exist. Now, Australia, AfterPay's business is concentrated in its home country, with 49% of the business being in Australia and New Zealand, which I love how New Zealand just gets thrown in with Australia, two different places, but we're just going to throw them together. And then in North America, we have 43%. And so you can kind of compare these two locations. The UK is only 8%. But seeing 49% in Australia and New Zealand versus North America, 43%. And so here's the chart right here. Now, this is from a company report from the first half of fiscal year 2021. When we think about this, does this give Square, is the benefit to Square that they get to go more global? Or do we think the benefit really is AfterPay gets more concentration in the United States? Like, how do you guys think about are we exporting Cash App and Square services globally with this? Or are we more importing AfterPay, Pay Now, or Buy Now, Pay Later?
Importing,
right? I would agree with that.
Yeah.
That this is much more about bringing these services to the United States to start. And then obviously Square, Cash App, Jack, et cetera, they want to bring Square's infrastructure, a lot of the Bitcoin stuff they're doing, they want to bring it to places like Nigeria, Ghana, other African countries, South America, et cetera.
Have you ever used Buy Now, Pay Later?
Nah, I'd be buying now, paying now.
60% of consumers have used it.
Do you think it's kind of schemy or no?
I mean, look, let's just have a little conversation. Buy now, pay later. Like, what are you buying that you can't pay now for, right? And if you look, it's like luxury goods, fast fashion, right? Like,
yeah. You go on like the shoe websites or stuff. They all offer to, hey, 0 down, pay now, buy now.
I think this gets at the point that Square is recognizing, which is buy now, pay later's popularity rising at the same time that young people's interest in credit cards and traditional credit is declining. So are you simply saying, let's just use an easy example. Let's say that 20% of the population of young people want credit cards, right, historically, and that's kind of where it's been. Is that declining and buy now, pay later is increasing, but you're still just hitting the 20% penetration?
Yeah, well, so I was reading about this earlier. MasterCard, JP Morgan, American Express, Citi, all these traditional credit card companies, as you would think of them, are all offering these services now because of that exact reason, that traditional credit cards are declining from that age range, and more people are just opting to use the credit that's offered to them in the buy now, pay later system.
And I think all those stocks went down when this was announced.
Probably,
right?
Yeah, because they all offer similar services.
Because really what Square is doing with this specific acquisition is they're now positioning themselves where, one, they can obviously help on the seller ecosystem, like the businesses that are their partners. Yeah. They can also now provide credit-like options to consumers, but it's not traditional credit. And so this squarely puts Square versus a Visa or a MasterCard in terms of financial services. But to your point, there are a lot of people who say, hey, using a credit card is really valuable, right? If you use a credit card the right way, like pay it off every Friday, right, John? Then you end up actually getting in a situation where the credit card can be a huge benefit. It's basically an interest-free loan.
Yep.
But if you use it incorrectly, you get saddled with debt. Average American's got $6,000 in kind of a monthly credit card bill. The average interest rate that you pay on a credit card is 16, 17%. You can get in a bad situation real fast if you're not paying off the credit card. So the tool itself is not good or bad. How it's used and with what level of severity, then it becomes good or bad. Same thing can be said about buy now, pay later, right? I don't know what the average interest is that somebody's paying on this stuff, but my guess is that it's lower than a credit card. So it's probably not 16, 17%. I could be wrong. And if you use it correctly, then it could actually be super valuable. If you're an idiot and you go buy everything now and pay nothing later, then you end up just with a ton of debt and you end up getting screwed, right?
Yeah. Yeah, I agree. I mean, I've never bought anything on it, so I don't know how it worked. Like, I'm assuming you don't get any.
You're a buy now, pay now guy?
Yeah.
Yeah, same.
If you can't buy it twice, don't buy it.
Yeah, well, twice. If you can't buy it with only a tenth of what's in your bank account, don't buy it.
Okay, well, that's relative, but I mean, that doesn't apply necessarily to everything.